Hi, everyone. Welcome to New to the Street. I'm Anna Berry. Today, we're turning up the volume on music investing. Joining me is David Schulhoff, the music industry veteran and CEO of MUSQ Global Music Industry ETF, ticker MUSQ. David, nice to see you again. And let's kick things off with a quick refresher for those just tuning in. Tell us, what is MUSQ ETF?
So MUSQ, which trades on the New York Stock Exchange under their ticker MUSQ, is simply a convenient way to invest in the global music industry ecosystem across streaming and content and live music events and ticketing and equipment and technology. I've been investing in music companies my entire career. I've owned many different publishing companies from Bill Monroe to Death Row. And there was never a convenient way for retail investors to get exposure to content, to streaming, to music catalogs, from Bob Dylan to Springsteen to Tom Petty. So I created a very easy way to get exposure to that entire industry by buying shares in MUSQ.
Perfect. And so this is the topic right now for a lot of people. There's a huge big earnings season coming up. Spotify reports July 29th, Universal Music on the 31st, then Live Nation, Warner. So what should investors be watching for from these major players? And how does MUSQ buy into this?
So, on a macro level, the music industry growth has been tremendous. If you read the Goldman Sachs report, the industry is doubling from $100 billion today to 200 billion by 2035. We're growing from 1 billion paid streaming subscribers to 2 billion. So when you're looking at Spotify, you're going to look at their growth and see how many new subscribers. Every quarter, they're generating 10 to 20% new paid subscribers. Additionally, we'll look to see if they're going to raise rates again, because we know that music's cheap and undervalued. And every quarter, almost, Spotify is going to raise rates, because for $11 a month, you should be paying more like $22 a month, closer to Netflix and HBO. So we're going to see how they raise rates and their new subscribers. We're going to look at the emerging markets, how many new subscribers they got there. But look, Spotify is our top position in the fund today, 12% holding in our fund. The stock's simply been on a tear. It's up 60% year to date. It's up 140% for the last 12 months. And it's just been a very compelling holding for our fund. And it's a good barometer for how all the other streaming companies are going to do.
Perfect. We'll talk about that. MUSQ has been on fire, up 21% year to date, outperforming a lot of the broader indexes. So, what's driving this kind of performance right now?
So if you look at our top holdings, Spotify, Live Nation, which is the biggest concert promoter in the world. Look at this summary. You have tours from Billie Eilish to Beyonce, Zach Brown, Kenny Chesney, SZA, Kendrick Lamar. The stock's been an incredible company to own. It's up 50% for the last 12 months. If you look at Tencent Music Group, that's a biggest streaming company in China. You look at CTS Eventum, which is the counterpart to Live Nation in Germany. You look at companies like Yamaha, these are our top holdings. And so all these companies are performing really well because music's really an uncorrelated asset. It's something very different. It's not affected by tariffs. And I think investors wanted to diversify. So, these companies are holding up very good. They're focused on digital streaming, they're focused on content and distribution. And look, and music's simply growing at 10 to 15% in the US. It's growing as high as 25 to 50% in the emerging markets. So our company is really focused on streaming, on content and distribution, and live music events and ticketing and equipment and tech. And we've got close to 30 holdings in our fund. And many of these equities are international equities. Some folks may not be familiar with companies in Taiwan, in China, in Japan, and we're investing broadly in all of them.
So, if music is an investment and this is an attractive space to be in right now, especially for, like you said, retail investors, everyday people like myself. So, for our viewers listening, what do they do next to get involved?
So, well, they can simply call up their broker or go to their E-Trade account or their Schwab account or their Robinhood account, and they can buy shares in MUSQ. We're at a 52-week high right now, close to $29. Probably a good time to own shares before a lot of these music stocks report earnings, from Universal Music Group to Warner's to Sony to Tencent to Live Nation. So they can just buy shares and put it in their portfolio. And if you look at the performance, it's done very well. These music companies have done well, and we're just providing something very different for investors to own in their portfolio. Look, everybody owns Nvidia, everybody owns Apple, everybody owns Google. We're providing access to companies like him in Taiwan, Tencent Music, companies like Believe in France, cool companies in different territories that are investing in music and publishing companies and recorded music, and something very different for investors to look at.
Perfect way to diversify. And it must be fun to be you right now, talking to all these global change makers in the music industry. Super interesting conversation with you, David. Always enjoy this. And for all of our viewers, it's MUSQ. How can you miss that? Thanks for joining us on New to the Street.
Thank you.